Hello everyone, it's Saturday morning, it's about 10 o'clock in Chicago. This is your host, The Cowboy, and welcome to Bitcoin and Ethereum Elliott wave analysis. Every couple of weeks we meet up here and we take a look at what the wave principle has for us and how we can read everything and try to find out what's going on with this market by looking at the waves, the structures, and the price action overall and try to make sense. Now, not a lot has happened since last week we talked. We basically, came a little bit lower in here and touched this 39,400. But overall, guys, we're remaining in a kind of big sideways consolidation. It is an extremely frustrating pattern for a lot of traders because, the price action here, it doesn't give you a whole lot of confidence either way. Not for the bulls, not for the bears. Kind of stuck in this range. And this is where the markets every once in a while have a tendency of wearing us down psychologically and just, mentally, just trying to, throw us off of our game and just, give up in our analysis and just, throw your hands up in the air and say, listen, I don't know what's going on with this market. You stop paying attention or you're losing your focus and your concentration. And all of a sudden the market, starts trending again. So these periods are periods of accumulation, periods where we've had a little bit of a distribution from the tops here, coming back, retesting some lows. The counts overall haven't really changed a whole lot. So I'm just going to kind of take you through them to kind of tell you where my head is at regarding, the structures overall and just, to kind of tell you my thought process behind some of these. So, it starts to look more and more that due to the fact that we are failing to rally, we have failed to rally and continue this upwards trend, that we might be stuck in a triangle here at this a fourth wave primary degree. And the fact that we've lost that high and we came back is telling me that we have to start considering this triangle scenario more and more. Now, I'm not, I'm never kind of rushing to call for that, let's say, as the market is trending higher, even after, let's say, a first correction, because I want to be respectful to the market and give it, every benefit it has to continue to trend. But the moment that I'm starting to notice more of a choppier pattern, then my head goes towards triangle scenarios. So this comes down here in three waves. You have a complex correction in a WXY. Then you go up in this ABC and you complete a B wave, two new highs, which qualifies automatically for a running triangle. The next leg that's either forming or is it almost complete is this wave C of C through this impulsive decline in a wave A, up in this wave B. This wave B traveled at about 38% of wave A, so that's a pretty standard move for a B wave. And then you're coming lower here. For right now, we have hit about 618. So this wave C, in proportion with this wave E, has traveled about 618 multiple of this wave A. So the next, reliable projection for this wave C is equality between these waves, which comes a little bit lower at about 32,890 in case for whatever reason this is a wave 1 and we're doing a wave 2 pullback right now and you're still going to get a 3, a 4, and a 5 and start to continue to trend lower. But as long as you're remaining above this A wave low, which comes in at about 30,000, this count remains fully valid. Now, as we know, wave C's, wave B's off a triangle, usually are quite complex and they take a lot of different shapes. Surprisingly, actually, under this scenario, this wave was pretty complex in there. So it remains to be seen how this is going to continue to to unfold. But if this wave C is done, the moment we're going to break above this B wave high here, I'm going to start to really dismiss the idea that we're still going to get another leg lower in the C wave. Now, the only way that could still happen is if this is wave W of a wave C. So bear with me. I'm going to have to move this back in here. So that's going to be, let's say, the end of the first decline in a wave W. Then I'm going to take my complex measurement, my combination measurement, and I'm going to have to go here in a W. And then you go up in an X here, and then you come back in this wave Y. So let me just kind of clean that up. And that's kind of how this was look. This will automatically change the degree. You can notice how Motivwave software automatically changes, so you're not, wrong in your subdivisions there. So it goes in an ABC. You're creating a wave W at the minor degree, and then you're pushing higher here in this wave X. So this could be a 3-wave move up in X, and then still a move down in this wave Y. And this will continue to frustrate, let's say, a lot of traders, I mean, including myself, because, triangles are very, very treacherous. They take a long time. They get complex, and it's just, really, really messy. But this is what the market does after it's trending, let's say, for almost a full year, or whatever it was, this 8 months or something. You're getting into a period where it says, well, we got to accumulate now, and we can't really, there's not enough demand just yet. There's still maybe some supply. There's still, a battle between bulls and bears here, and that creates this kind of sideways pattern. So this would be the next thought process. If you're going to pass above this B wave, if it's just for a little bit, I think I'm going to be fine. But it matters how you do that, right? If it's an impulse move, it's unlikely that that's going to be an X wave. It's very likely that you're probably starting, a next advance higher, and you're maybe doing wave A of D, and then followed by wave B of D, and then C of D. So that's also possible. Now, this decline here is kind of short compared with this wave A. Mind you, it's at about 618%, which is the relationship that we're kind of looking in between the legs. Actually, it's 618 compared with this wave B. So, with this wave B. So, there's still plenty of scenarios, but I'm going to keep an eye on it. I'm going to revert this back, because this is what we're having so far. So just kind of bear with me so I can clean this up, right? So I'll still keep this in mind. But the moment you start to kind of get back above this 45.5, I think, this narrative that this is a wave second, it will definitely start to kind of change. You're going to start to get a little bit deeper in there, and this kind of has to be in 3 waves, but kind of keep an eye on it, right? We'll see if we're going to get a failure and then a return back lower for a 3, 4, and 5. So this is my projection on triangle. And also, if you notice down here at the bottom, you have the time fib, right? The time fib is very important when you have triangles. When you compare wave 4 with the wave 2, which you kind of don't see in here, the second wave, but right now you kind of have traveled about 100% equality between that second wave, at this primary degree of trend, and the fourth wave. And the 1618 comes in a little bit later here, by let's say, what is this, in about June, beginning of June, middle of June, where you would have 161.8 multiple. So we're going to continue to monitor this. There's not a lot of trading opportunities in here. We're having a little bit of a support, but I don't want to kind of step in front of a running train. So I'm still, debating in terms of, opening up new positions or even trading on a short-term basis in here, because, there's not a lot of confidence yet from this market. I think there's certain levels that we got to break still, to kind of create that confidence. And I'll show them to you here in a second. The candlestick patterns here, are looking fine. Obviously, this is the month of January. One thing that kind of worries me, if you take a look at the moving average convergence divergence here, you will see MACD, how it's starting to lose a little bit of momentum. The moving averages here are starting to try to overlap each other, and the moment that one starts to, the smaller one, which is the 12, starts to get over the 26, then you're going to start to see a little bit more momentum to the downside, and you can see that also on the histogram back in here. So this is something that slightly worries me onto the monthly charts. Here is how it looks on the weekly, right? You're still kind of pointing lower, right? We haven't really gotten back to a bullish move like we've had in here. So actually the black one has to pass over the red, and you have to start increasing momentum in here. So both monthlies and weeklies are looking, you know, a little bit like they want to still continue towards the bearish side. But then if you look over to the daily, you know, we're starting to cross over and increase a little bit of momentum in here. So maybe shorter term, there's still going to be a little bit of a rally, but looking at weeklies and monthlies, you know, we might still be in a little bit of a pain. So keep attention to these momentum indicators, because, you know, they can kind of guide you a little bit in where you are in that sequence, and combine that with the Elliott wave structure. Here are the moving averages. You know, where we are on the weekly, we have broken below the 50, we have closed below the 50. That's a pretty, you know, bearish narrative in there. So it's extremely important that we climb back above it, we regain it, and you move back above this $50,000 level to continue over with the uptrend. Otherwise, you know, we're either going to sell off or maybe move sideways a little bit more and wait for this 200 to kind of catch up a little bit more, and we're still going to chop around. But the fact that we have lost that, that's not necessarily a positive for the bullish development. So it's important that we start to regain that. And then you're familiar already with my longer term white count, which is, you know, ultra kind of bullish in here, where I go in a 1-2 or a wave 2 still in formation, right? That could be a flat where you're coming up in this A wave, right? It's a complex move in a wave A. Then you go up in B in 3 waves, and then you're still forming a C wave decline here that might take a little longer to unfold. And for it to kind of start to have a little bit of a proportion with the wave A, it would have to come, you know, almost as low as this in here for more of a regular flat kind of look. Even though you've dipped just slightly higher, right, it qualifies automatically for, let's say, for a running flat. But you know, you would still want to see this coming a little bit lower. Now, if this wave 2 stops here, and this is all I'm getting in an ABC, you know, it's quite unlikely, but if that happens, that means that the market has a lot of strength behind it that is actually about to rip to the upside. I have my doubts on that, so I'm just going to kind of contain myself and just respect the fact that, you know, this thing could continue to maybe correct a little bit and give us, let's say, a little bit of a deeper retracement for a second wave. All right. The other scenario is that this is not a C, right, of a flat, and instead you're actually having a wave 1 and a wave 2 here, and you're starting to move up to the upside and becomes part of the larger sequence already. So this is this wave 2 has completed back there, and this becomes already wave 1 of a larger you know, let's say wave 1 intermediate of a larger wave 1 primary. So that's the next scenario that we're going to keep in mind in here. So it's all about kind of proportion. You're not going to be able to, you know, tell everything that's going on to the latest detail, right? Markets are fluid. There's a lot of interpretation, and that's why Elliott wave, it's more like an art form rather than a precise science. I know, you know, it would be very, very easy if Elliott wave would give you, you know, all of a sudden all the answers, but it's not. You got to read the sentiment. You got to read the size of the waves. You got to read the possibility, some of the momentum indicators. You know, you got to put in a little bit more work than just by looking at the counts and coming up with the full solution. So sometimes when things are not that clear, you know, we just wait and the markets will reveal themselves to us, you know, I hope pretty shortly here. So this is kind of what I wanted to show you into the longer term formations in here. And now I'm going to dive in a little bit lower and just kind of tell you what we're looking into the pro room and kind of what I'm talking to my members every single day into the daily updates and you know, their questions, my answers, stuff like that we kind of go back and forth every single day into the chat room. So this is Ethereum, which I'm going to come back to. But let me pull Bitcoin in here. We got a bunch of things that we're following, and I'm going to make this a little bit bigger. So this is kind of the working count environment where we're looking for this, you know, ABC, obviously, and that's that C wave that I've showed you just previously. Again, I have a little bit my doubts in here regarding this being, but let's see if we can get a little bit of a push out of here. And basically, you know, one of the things I'm watching is this, let's say if you go up to a 1 hour chart, right, this looks like a nice impulsive pattern. So you can count as, you know, 1, 2, 1, 2, 3, 4, 5, 4, 4, 3, sideways in 4, up in 5, and complete a wave 1 of the lows. You have a nice clean pullback here, and that's almost a 618 retracement right there. You very, very close to it. And now let's see if we can do another 1, 2 and start to climb higher out of here. Or this could be, let's say, an X wave, and then you can still sell lower one more time to kind of complete that pattern. So this, I'm talking about a shorter term outlook, and I think I might have this back in here, right? And let me just kind of zoom this out. And this was something that I was watching as the moves were going up, and I was talking to the guys in the room, and I said, I think we're going to get a little bit of a pullback. It might be an ABC that's already completed. We might get a B wave and then another C, but just kind of respect the fact that you've had a major rejection of these levels, that you've gotten an impulse, and then let's see if we can kind of squeeze another push out of here and break above this very important, support, which is now resistance, and see if we can climb back above there. But basically, you're having a nice confluence of lines in here. You have the downtrend line that comes from the highs, then you have this horizontal line, and that circle right there, it's going to be where the market is going to have a little bit of a question for the bulls and say, listen, are you ready to take us on? The bears will say, what's going on here? Let's see if we can push it back down. And sure enough, these levels back in here are kind of similar and in the same neighborhood as we have the moving averages. So I can see it's kind of the same circle back in there. It's the, you have the 200-day, you have the 50, and you're about to do this, famous bearish cross here, this death cross that's about to happen. And markets are probably going to go back up there and try to retest that. At least that's my thinking. But for right now, we're still being rejected here by the 21-day, which is a shorter momentum indicator. And, if we can kind of get back above that, we'll get a little bit more steam to the upside, and then we're going to, bounce our heads against this important level, let's say between 45K and 50K. The moment you start to get above this 52, things will start to look a little bit more interesting. So this is kind of, what we're watching and kind of what I'm working with, every single day with this type of counts. We're dialing down to smaller time frames. I'm a little bit excited about maybe taking a trade back in here, but, I just wanted to, kind of stay on the sideline still, so I don't get myself, in a twist. It's not the perfect setup, due to the fact that we have a little bit lack of momentum, and the bears still have a little bit of the upward trend, and I don't want to kind of step in front of them, right at the moment. So the other count is it's another ongoing count that I've showed you before, and that's a second wave pullback, and we're looking at this move here as being an impulse of these lows, just going to 1, 2, 3 sideways and 4 up and 5. Or if you want to move the second wave back in here, that's fine too. What that does, though, it changes the structure to being more impulsive. So you go in a 1, 2, 3, 4, 5, and then you come down here, let's say in an ABC. You can count it as a W, X, Y as well. I mean, it doesn't really matter. It's just that, you are having sort of a corrective pattern pushing down. And, from here, we're watching this 1, 2, 3, 4, 5. If we're able to get, let's say, all the way above that X wave that I've showed you before, and then start to trend a little bit higher. But in terms of projections in here, in terms of some near-term targets, you would look for an equality here at about 46,800. So you go in a wave 1, then you're looking for that multiple at least 100%, and then if you can get the 1618 towards 50,000, that's an even better looking third wave advance, and that's going to give me more confidence that maybe this is a wave 1 of a larger pattern followed by a second. But it's still very, very early. We're still going to have to fight again this major trend line coming down, those moving averages, and we'll see what happens. But at least we kind of know what waters we're swimming in, where the sharks are, kind of what's going on around. And I think for me, at least, studying that way, it puts this whole market into a perspective. It tells me to wait, tells me to be patient. I got confidence in my counts. I kind of understand what's happening in the larger scheme, and that's all I can ask for from an analysis here. So yeah, that's kind of where we are. So now, guys, with Bitcoin being kind of covered, I'm going to jump over and take a look at Ethereum. I don't think there's anything else that I wanted to show you necessarily. Oh, the other thing is this. So just a very simple kind of pattern, right, regarding that flat that I was showing you before. It's just basically, a move down in this wave A, up in B, right? Although this has to shift back in there because it's a 3-3. And then you go, let's say if this was a wave 1, for whatever reason, you go in a wave 1, 2, and then you're still doing a 1, 2, 3, 4, and 5, or 3, 4, and 5. So take a look at this blue one, for equality coming down towards the bottom of this channel that I have in here, and that would create that more of an exact flat pattern, followed by, hopefully the next, let's say, push back up higher. So if you can notice, right, this would be more of a proportionate advance or a proportionate decline and proportionality with this wave 1. When you kind of look at the structure, it's a little bit bigger, goes sideways a little bit, and fits better, let's say, this impulse out of here. But we're going to keep an eye on it, and if this moves happens, then I'll switch over to this flat count idea, and I'll start working with it. All right, let's jump over to Ethereum, and let me show you a couple of longer term charts in here, and I'm going to start with this one. This one is very, very similar. I talked about it a couple of weeks ago, very similar with the one that we have in Bitcoin as well, where we're actually looking for a larger triangle. I'm not going to dive in all these moves, but this could be something super complex in here. I would have liked this to be more impulsive, to start considering it as a wave A of a of the C wave. So the more this kind of lingers, if it starts to go back up higher, it's likely going to fall apart in the triangle idea, right? It's not as good looking as it is in Bitcoin, and if it wants to be something else, so be it. But I'm going to kind of continue to monitor this to see what's going on, because if this is all I'm getting for a C wave, that would be an extremely short move, right? Because then you would have to do a D and an E somewhere in there. So you go A, B, C, D, E, and that's just totally out of whack, out of proportions. I mean, for a fourth wave, you would be looking, you got to have at least 23%, if not 38% retracement from the top of the wave 3 down to the bottom of the wave 4. So I'll just kind of keep it on the back of my mind here, and just try to work with it. But it's a very, very awkward structure that's happening right now in Ethereum. So this kind of sends me over to this interpretation, right, where we're still looking at this as being maybe a second wave, either finished here or in process of finishing up, just like in Bitcoin, or this whole thing here, it's a wave 1 and we're getting a wave 2. All right, so if this wave 2 finished, let's say you switch it back to the left a little bit, and you have a 1, 2, 3, 4, and 5, and that's a second, right? It's a 1, 2, 1, 2. You're starting to get a little bit more proportion, and you're ready to break to the upside. But I'll show it to you here in a second, so you can kind of see what I'm talking about. But longer term, we're in a nice bullish uptrend. Things are looking pretty decent in Ethereum. Moving averages, we're holding the 50-week, right? So that's the kind of the first major test that Ethereum it's actually giving this 50-week moving average, where we're actually touching. We came close to it back in here, but now we're actually touching this thing. So let's see what happens if we're able to hold. Losing a little bit of momentum here as the 21-week, it's kind of coiling backwards. The RSI continues to drop, is below 50. So there are some things here that could tell us that there might be a continuous loss into price of Ethereum. So don't be surprised if that happens, because I mean, look at this thing, right? You're losing a little bit in the MACD. This is kind of coiling down, and then if you look at the 3-month, you've had 1, 2, 3, 4, 5, 6, about 7 quarters of bullish price action. So a little bit of a bearish pullback wouldn't be a big surprise. So that's kind of one of the things that I'm definitely watching on relative to the MACD and kind of the overall momentum of the trend. And then a couple of things I'm going to go and show you here into my working room in here. Let me find it right there, Ethereum. So I'm going to zoom this up. And so this is wave 1, and it could be a wave 2 in here, right, where we're coming. So I'm going to watch this very careful, because it's almost like Bitcoin did, right? Bitcoin pulled about 618 of that latest advance. Ethereum hasn't really reached that. But if you're looking at this as a 1, 2, 3, 4, and 5, right, then this starts to smell like maybe a decent second wave pullback in here. So I know that's pretty bullish, and especially kind of runs a little bit against what's happening in terms of momentum here. And if this happens, I would be pleasantly surprised. So I'm going to keep an eye on it definitely to see kind of what Ethereum does. I don't have a lot of kind of trading, not necessarily methods, but attraction to trade Ethereum at the moment. By the way this kind of structure looks, it still kind of tells me to stay a little bit on the sidelines and just kind of wait. You can see here you have a pretty nice channel, which is the one that I'm watching, on a day-to-day basis, right? Because you've kind of sold off, you came to the bottom, you have a nice rejection, you're coming back towards the middle of this trend line, but I want to see Ethereum start to climb a little bit better, right? Just kind of go back, overtake this 3,800, something like this I would be looking for. Right? Let's see if we can do that at least, or even higher like that, and then maybe create a little bit of an inversion here, right? So then I would start to get more excited that you're actually working towards, let's say you might have a neckline in here, then you're starting to work towards a larger advance upwards, rather than jumping in when you're actually still kind of in this downwards corrective channel in here. So besides Elliott wave, you kind of have to look sometimes at kind of what's happening with the price, right? Just price reading, candle reading, pattern formations, things of that nature, that kind of come in addition to your regular wave counting. And then every once in a while, not too often, but every once in a while, things are going to line up, and you're going to notice and say, wow, I like this pattern, and just a bulb is going to come up, and you'll say, I'm ready to go. And that's when you're going a little bit more in. So for right now, it's still, it's encouraging that we're kind of pulling back out of here, but I'll be watching it. So that's kind of why I've covered the SMA. Look at this, right? On the daily moving averages, you lost the 200, you've lost the 20, you've lost the 55. So let's see if we can climb back above those, right? To kind of regain the upside momentum. And I'm not going to talk in this video too much about let's say what's going on in the macro picture, right, with the interest rates getting on an upwards trajectory here. At least that's what the Fed is telling us. They really haven't done anything yet, but apparently in March they're going to start raising, so we're pulling liquidity from the market. You can notice a little bit of weakness in the Nasdaq and the S&P 500 in the equities overall. So cryptos are suffering a little bit as well. So we'll see what's going to happen. And the Fed might come and just say, listen, the economy is still, let's say, struggling a little bit, and we're not ready. Or maybe the inflation will come down, right, from wherever we are at 7%, and it will pull back towards 5 or maybe 4% in the next, let's say, 2-3 months. I don't know. That would be, maybe another kind of reason for the Fed not to get too aggressive on a rate hike environment and move over to something slower. And then, you will automatically notice a return to growth stocks and a return to Bitcoin and a return to cryptos in general. But for right now, the markets are sniffing basically what's happening around, in the macro structure. And, they're just kind of looking for their bearings, just kind of we are at the moment. So guys, listen, thank you so much for being part of this channel, of this journey with me on YouTube. We're slowly climbing towards 4,000 subscribers. I want to thank every single one of you for continuing to kind of stick with me. Don't forget to hit the thumbs up, give us a like. Continue to visit, spread the word. Hopefully you find good knowledge in here and good information, and both in terms of Elliott wave structures and sentiment and patterns and stuff like that. So again, I want to thank you for being here, and I'll be talking to you a little bit later. If you want to visit us into the pro room, there is a link below the video, and you can come and check us out. Take a month, see how you feel about it, and I'll be happy to see you and help you out with any questions. We're doing basically, every single week we have, live streams, everything that's Thursday, and then, daily videos, and there's a bunch of talk in the chat room as well, and regular updates on the markets as well. So anyway, enough of that, guys. Again, thank you for being here, and I'll be talking to you a bit later. Bye-bye.